Hi, this is Randy Finney with Right Side of the Chart, and this is a second early session, almost a mid-session update for Thursday, November 20th, 2025. Just in the mood to do videos. I've just completed going over the top 30 components of the NASDAQ 100. And I just wanted to, if you're interested, I'm going to share my views on the long-term charts. Like I say, I talk on multiple time frames. I'm starting out here. This is NQ. This is the 5-minute chart. As you know, I've been living in that world lately. This was that preferred bounce target zone right here where, I mentioned it on QQQ as an objective short. And I have on the 5-minute chart, we just broke down from that little bearish rising wedge. So again, you have near-term stuff. They're going to probably almost certainly buy it here. That's I give you targets on QQQ today. That's your minimum. And if we get some traction, we could head down here. Let me extend that trend line if I can. It's very hard on this platform to kind of grab these little suckers, but either way, similar to, you have the levels on QQQ. Now let's just look bigger picture. This is what, this is what determines what happens today, intraday, pullback correction. But let me just dive into this. So if you are interested in the long-term outlook of both the market and the pretty much leading stocks, I like to use QQQ. I very much follow SPY, very much follow different sectors, the financials. Remember, the biggest differences between the NASDAQ 100, which are the 100 largest stocks in the NASDAQ composite, and the S&P 500, is that the S&P 500, first of all, the second largest sector, and it's a substantial weighting, is the financials. And there's virtually little, if any, financials in the NASDAQ 100. So that's a big difference there. And the NASDAQ is mostly tech stocks, high growth, think biotechs, got a lot of biotechs in there and stuff like that. The S&P is grandma's index. It's very well diversified. It's a great index for investing long term. That's probably why it's in all the 401ks, and you don't have, typically, I've never seen the NASDAQ fund or anything in the 401k, because most investors, they don't want that roller coaster. During corrections, when you have the S&P 500, you have utilities, healthcare. Those are defensive sectors. They do well when the economy does poor. Consumer staples. So a lot of that stuff that tends to hold up or either rise or fall less than your higher growth stocks. All right. So it's a very simple concept. But again, they're both important indexes. I follow both. So what we're going to do today is go over the longer term charts. And and I'm doing these videos because, again, I know, and I've read from the comments, I've done this long enough that it concedes, covering different developments on different time frames, plus doing what I do. I do my best to acknowledge bullish and bearish developments, levels. Like I said, the recent 60-minute divergences. I'll give you my thoughts as to whether they will play out, how far they'll play out, and then which ones are likely to fail. Right now, I want to continue to reiterate, I'm going to show you the long-term charts that we have, on what I call the more significant daily and weekly time frames, some pretty solid sell signals and very much bearish charts, bearish technical posture is what I call it. Never to be confused with, I don't know why I'm sitting down. The Intel, I'm going to go down to 30 on the NASDAQ 100. As you guys know, if you follow me, when I go through an index or a sector, I have the components sorted, and I sort them by market cap. And so we're going to go through all the top 30. That'll take us down to Intel. And when you do that, remember the NASDAQ 100, just like the S&P 500, are cap weighted. So if you can get an idea where the top, just in the NASDAQ alone, you just need the top 5 or 10, and that will tell you where that index is going without fail. But the more you can look at, the more it shows you, hey, you're getting outside of those big AI. Remember, it's a circle jerk in the AI sphere with Apple, NVIDIA, Microsoft, Alphabet, Amazon, Broadcom, the chips, and all that. So when I go through the top 30, we're going to see some of the other stocks in there. So let's just dive right in. We'll do it in order of cap. Well, why don't we start with the index itself, the NASDAQ 100. Again, a refresher, recap, whatever you want to call it. Big divergence, multi-year divergence, bearish engulfing candle is our sell signal, breakdown and back test. That was also our sell signals there, and the rejection. And we just need to take out these recent lows to really start what I think will be one hell of a party. And again, I spend a lot of time talking long-winded in these videos to give you not just where I think things might go, what key levels to watch, but how it might play out. That to me is a critical thing that I don't think I don't follow anyone else, but when I turn the TV on, analysts will give a price target, no time frame, how it's going to get there. And I do my best to kind of tell you when to think kind of zigzag up and when we'll have reactions on price targets and when you can have, a very impulsive, swift move. And there's a big difference there because on those fast moves, if you're not ready, if you don't have a trading plan, if we break the recent lows from, this week and really October 10th, like I said, I think it'll be a very swift move down. And among other reasons, technicals are a big part of it. It's psychology. All of a sudden, of course, the media slaps headline. Everything's hunky-dory because NVIDIA beat. It's a big surprise. So my point is it will be a knife, a sharp, jaggedy-edged dagger through the heart of the bulls should this post-earnings pop fade pretty much again. Should the lows go on the 10th? And maybe I'm wrong. Maybe we punch down there and they check it. The stop raid comes and tests those lows. I'm talking about right here. And if it does and they whipsaw and you close back above there, that especially that day. So again, if you break down, that's a sell signal. If you get really red in the day, especially as you're heading into the close and there's little, if any, chance of reversal, that's all the better. But when again, assuming my read is right, nobody's saying it's going to be. If you get that swift move down and you're waiting for a daily close, well, you could be halfway down, possibly. Let's see how far T2 is, just for kicks and giggles. That's a 205. Yeah, you could be halfway or better down by the time you get a close there, because it's only about a 5.4% drop between T1, which again is that those lows there, and the T2, which comes in with price support in the 200-day. And all right, so let's get to so we're on those sell signals. So far, so good. I give you the 5-minute chart. Take it, don't take it, whatever you want to do. Nice fade there. Active trade. Still going to stick with I told you I went home with a mild swing short position, mild VIX, added to that on this. And I'll decide whether I want to make those day trades or continue to hold them and just set some stops. Right now, I'll tell you, a good stop if you took this is just above today's highs. It was resistance. They did what they usually do. I call it a momentum fueled overshoot. You guys, if you follow me for a while, you know what that is. That's when we gapped up. So there's a lot of momentum coming in. So we ever so slightly, we're talking a fraction of a percent, took out that level. And so now you can have a stop above there if you want to ride it and go for the prize, or if you just want to take the quick buck. Look, we're at support now. And if we hit, there's yesterday's reaction high. There was that target zone. Okay, let's dive into the charts, or I'm going to be more long-winded than I usually am. All right, we're going to go to the weekly time frames. If I'm tracking okay on time, I'll toggle over to the dailies. All right, I already showed you what happened to QQQ. This is NVIDIA. This is everything, big fat everything burger. This is our secular bull market uptrend line, and it's a potential target. I've given you targets last year, which I still maintain, and I have not wavered on. T1 we already hit. We hit that at the April lows at a time I said time to cover all shorts, go hard long, full long. And so it's just a bounce off the first target with a marginal new high, but still very well within. This was the original breakdown here. Very well within any reasonable RR. Again, even when I have long-term targets, there's never a point that I could see where if I see calling for a 72, which now from the recent high would be more than a 72% drop. I'm not going to sit there. I'm going to ride out the counter trend bounces because they're going to be very powerful. I love bear markets, not just because I like shorting, but the bear market counter trend rallies are explosive. You literally make in days or just weeks what takes months and even sometimes years to make in a particular stock, or sometimes even in the indexes. So Let's see, we're not there yet. Like I said, my long-term indicators are still, it's not. I covered those earlier, so let's not get there now. All right, but let's let me continue to reiterate. It wasn't just QQQ and SPY and everything else. Nvidia, the lead dog, put in a bearish engulfing a couple weeks ago and remains below it. And so far today, even though they of course blew away earnings, more business than they need, raised their outlook, and the stock's up a paltry 1.5%. So it's what that shows you. If you're, again, I don't want to read too much into it. I always tell you the initial reaction, don't read too much into it. But if you wanted to try to read into today's action, it will tell you that this stock is saturated, meaning when this is metaphoric, not literal. I say this all the time. When the last bull, all these guys on CNBC and gals out there foaming at the mouth bullish on Nvidia, everyone I've ever seen, I don't know if there's a bear out there on it, but when the last bull has bought his or her share of Nvidia, then who else is left to buy? And that's why great stocks peak on blowout earnings and great news, and it's a saturation of buyers versus sellers. There's no more buyers left. Short sellers are afraid to short the stocks. You have that. Anyway, let's move on. There's Nvidia. There's my targets. If hit from where we're at today, or let's just take it from the highs recently, T4 would now be a 81% drop. So it means we went up roughly 10% from where this breakdown, and we're still below that was the primary uptrend line that I have, or the uptrend line off the 2022 lows. This is the secular bull market uptrend line. I'm not ready yet to make that a final target. I haven't done that yet. I have potential additional targets, but that has been my target now since last year. All right, there it is. There's the technicals. There's nothing else to say on this one. Let's cover the rest of them. Apple, I've done this for you, and I've covered this chart many times over the years. I know it's busy because I have support lines here, but Apple is a great company. There's nobody that's going to deny that. It's a cash cow. And for those of you who wonder how Apple can drop, or any of these stocks to my targets, it's just the nature of anything. Even in a great bull market, you're going to have very powerful corrections, bear markets, 82%, 42%. And these are all, by the way, every single one, and I've covered this many times over the years, they're all measured off the divergent highs. I always say divergence isn't a sell signal, but what is are breaks of trend lines and other levels. Usually I'm looking at the uptrend lines at 200 days, 62, 45%, 35, or 39, 35, so forth and so on. And that brings us up to here. And again, these are all measured after the divergent highs. That was the last divergent high there. We shorted the market there. I didn't measure it, but let me go down to the April lows, 35% drop. So I'll just add that now. Roughly, ballpark. I'll just take my measuring tool and do that, round it off, 35% drop. And we've come full circle. We've made a marginal new, but still divergent high. It's all still part of that same divergence that's been building for the last several years now. There's your primary uptrend line right there. And of course, we have Apple actually as an official short trade based on the daily chart because we broke this little wedge here. And so that's still, and of course, I told you we need to take out 266.78, especially on a closing basis. So there's the technical posture. Where does Apple go? You see this yellow uptrend line? I think that's a nice potential target right here. Comes off there, captures all these lows. This was a bear market there, and then we kind of stabilized and set up that trend line. If hit, and again, all these horizontal support levels are all potential targets, but that's going to be about a 41% drop for Apple. Board 5, I must have something on board 5. I haven't updated that in a while. Microsoft, drew these lines out. This is where I think Microsoft's going. So Microsoft, again, series of divergent highs. This was a divergent high. T1 I gave you in a video, I guess, on November 4th. Target right there. I'll give you two targets there. Also went hard long, full out bullish with an overweighting on the Mag 7 stocks, and my two top picks, I think, were Apple and Amazon in the very beginning of 2023. So that was also another cover shorts. We got longer term targets. They will be hit, but we got to bounce first. And so that was first target was hit. And that was from that divergent high, the short there. Another divergent high, another drop. Again, these drops are substantial. The corrections in an ongoing bull market, 26%. And this time around, and there's no, that's not a bearish engulfing, but it's a divergent high in Microsoft. And again, just kind of to where I think things are going. So, guys, only time will tell if I'm right. But if I'm right, that's a 63% drop in Microsoft. That's going to take it back to this secular bull market uptrend line right here. Comes off the '09 lows, like I covered in earlier videos. So I'm just trying to paint the big picture and show you that the technical posture on these stocks, if you've watched and followed the little, how we game that, the 15-minute charts lately on QQQ, covering recently the divergent low and, nice rally. It was the same exact technicals, but on a much shorter, truncated time frame. So the frequency changes. Those trades were trades, and I'm referring to the QQQ trade that was based off not even my usual 60-minute chart. I went off this one. I'll give it to you. Well, yeah, I did have 60-minute on the futures and then 15 on QQQ. And so it's these same little patterns here, and the divergent low that I highlighted here that's given us this so far. Nice bounce. And again, it's relatively small. If you're an active trader, you take larger position sizes, and it's well worth it to make, even every 1% you're making QQQ. All right, back to the long terms, weekly charts. All right, so there's Apple. Needs to take out this trend line, and based on the technical posture, PPO starting to roll over. I believe it will, and when it does, it'll just help firm up the longer term. And that's what I'm trying to do. If I'm right, there's two things to consider. If you are a flexible trader and comfortable with shorting, you can make a ton of money. More money in a bear market because stocks almost always fall a lot faster than they rise. So number one, you can make in a year what might take 3, 4, 5, 6 years in a bear market to make, bull market, being long. The other thing is the amount of money that if you don't short because whatever you're not comfortable, it's anti-American, whatever your reason is, you can sidestep huge losses that could set you back years and possibly decades in retirement, your 401k and all that. So here's Microsoft again. There's the target. There's the divergence, the technical posture. I just need to make that. We made an equal high recently. I'm going to go through more of these. Some of these I've already covered. Here's a Alphabet. See, you can see this is where they came public back here in 2004. That yellow uptrend line is a secular bull market uptrend line. It tells us what we know. And I've talked on this fundamentally. Again, I don't hear a lot about it, but I don't follow others. Occasionally I'll turn on CNBC when there's a Fed meeting or a big earnings report, and that's when I hear the bobbleheads come out and talk. But, my longer term views are not just based on these technicals. They're based on the fundamentals, the fact that interest rates have, by every metric that I've covered many times, completed a almost 40-year secular bear market, and they've inflected. And by every metric, we've embarked on a new secular bull market of interest rates that ended with the COVID, started with the COVID lows 2020. Alphabet, there it is. Needs to just take out this uptrend line, and then it'll come and visit this ultimately. It'll hiccup along the way, but there's that primary uptrend line off the 08, 09 lows. It's probably going to hit it around, depends where it hits it, here 45, there 37%, somewhere in there. And again, these all mesh with my targets on the equity markets. There's Amazon. Again, these common traits. Amazon already actually broke its secular bull market uptrend line. That's very significant, by the way, guys. That was the primary uptrend line. Now, I'll do this right now. I'm going to add one. You're going to see why I'm adding it, how I analyze charts. I'm going to go to that was when they came out, the IPO. That's when Amazon started trading right there in the late 90s. and there's a reaction low there that I excluded before, and we're going to take that across now and make this now the more, and you know what, and I have to come in and catch these two reaction lows there. So now this is what I call BOD trend line. You guys know I make a lot of terms up. Benefit of the doubt. When I see, another support level below, you give it the benefit of the doubt. So when it breaks that, again, it's a long-term trend line. When you break a multi-decade trend line, you don't position for a swing trade that's going to last a couple days or even a couple weeks. You position for a trend trade that's likely to last many months, if not years. All right, so we'll just select that BOD trend line, and where to? Amazon's a great company. It's not going to go away anytime soon. But this is what bear markets do. I'd say good chance we come here. Here's a couple longer term targets for you. For those of you that believe in the technicals, that would be a 68, and that would be a 60% drop. Minimum if that primary trend line's broken is right here, and that's a 43. So right now, let's again, first things first. We haven't even flipped the trend indicators, but we did, if you see here, break down, back test, and we're getting rejected. We're coming up. I told you Amazon just tested yesterday the 200s, 200 simple. Broadcom. I'll go a little faster here because it's a lot of the same, and that's the story here. But again, I'm going to get to some other non-tech stocks as well. Big divergence. This one broke down that trend line recently, and you can see its primary bull market uptrend line is way down here, and that would be coming in somewhere in here. And these techs, the semis, have just a history of corrections that run about the 80, 78, 80% level, and you can just measure it. This is a long-term chart, and I'll pick one period there. There's a 50% drop. Some are more cyclical than others. You have to look at each individual chart of each semi, kind of get a feel for how far they tend to fall, how much they tend to fall in bear markets. There's Meta. Meta's done. Divergent high. Remember, we had, and this is where I started getting charged up. Thought that had a lot of potential to be the top. We broke down the primary uptrend line, back tested, got rejected, and it's just simply a kickback rally. Nothing goes straight down forever. This one kicked back. We're still below the primary trend. This is a longer term, more significant uptrend line, which it also broke and back tested right there. See, it was a nice, well-defined off the, this is when Meta came public in 2012, and it broke it. A nice bear market, back tested, rejected, and then more recently put in this divergent high, took out that trend line. It's coming up here. If you want to buy Meta, this is first decent support. It's going to be about 550.50, about at a 550.43. We'll call that. You don't want to step in at 550.43 if you want to buy it. But I would only buy it if you can make a case, if it gets there, that the rest of the market's going to bounce. And that's, again, why I do these very complex videos, looking at the components, not just the sectors themselves. And then after that, down here, so forth and so on. And you can see Meta has clearly taken out its 200s, just like it did there, just like it did right here. And when it took out the 200, see, it was holding, testing, and then it took them out, and all that happened. And by the way, guys, when I do this, look back at the previous, I don't have everything annotated here. You can see I can just borrow you, duplicate you, divergent high. That was a textbook, bearish rising wedge. There's a nice clean uptrend line. So again, technical analysis, it's all about recognizing. I didn't invent technical analysis, but I fell in love with it when I found it. Some years back, people started to realize there were certain patterns in the market. And if you could recognize those patterns developing, you could then take what happened in the past, in other words, some of my favorite little wedge breakdowns, and extrapolate where prices are going to go going forward. And so that's it. And that's a big fat, guys. This is a multi-year divergence. It's been building really from this point right here. That's when the divergence started. That shouldn't be here, this line. That's not really it. And it's bigger. There's no guarantees, but typically the bigger the divergence, the bigger the ensuing move. That was a 44% drop. This one, the stock dropped 77%. And so for anybody to say that Meta can't drop, 56, this is just, these are, my initial targets here. Why not? We were in the midst of the strongest bull market in history when that one happened. And so anyways, Tesla, here's my long-term uptrend line, which before all said and done, if the bear market that we have coming in the coming years comes, that's where it will probably go. You don't even want me to measure that one for you. There's the current uptrend line, comes off the 2019 lows. That's going to be a big one if and when it goes. And then more recently on the weekly, we just broke this one. It's trying right now. It's trying its best to recover that, but the week is not over. So come Friday, tomorrow at 4 p.m., if you close on or below this, that's simply it'll be a breakdown. Last week, you parked right on it, right on the trend line. And again, it's well defined, guys. So it's a level that I think is very significant. That's why I do these videos. And we get that sell signal. You have some support around here, but you're probably going to come down and check that trend line ultimately. Alphabet, that's the other share class. I already covered GOGL, Class A. This is the other share class, I think Class C. Netflix is done. I showed you on the daily recently. That is what I call beautiful uptrend line, very clean, well-defined. Comes off the early 2022 lows, complete with my preferred divergent high, negative divergence, just like you had right here. Last time this stock put in divergent high and then triggered a sell signal via a breakdown of the wedge right there. It fell a total of about 77%. So again, I'm doing this hopefully to just show, and this is just, and guys, again, this was a bull market correction, 77%. Extremely profitable to trade on the short side, and just as profitable to sidestep if you're only a bull and you want, this is a core holding in your long-term account and you were able to heed that sell signal. And if that one didn't do it for you, we had even a better trend line right here that broke. And if that didn't do it for you, when that trend line broke, you also took out the beloved 200-day moving averages, which bulls love to buy pullbacks to. But once you take them out, caveat emptor right there, buyer beware, because that's usually when these stocks buckle. And so fast forward, bear market ends. 200s are recovered right here, taken back. They dance on by pullbacks to the 200, simple and exponential moving averages. Exponential first, usually exponential on tech stocks and those type. And buy the 200s. Oh, they're also buying this uptrend line, right? Buy it. Rut row. Scooby-Doo rut row. Trend line's broken. Been back testing it for a few weeks. 200s are broken. Not, if you want to give it the benefit of the doubt, you can wait for it to get a little lower. Once it becomes clear to the masses that Netflix has lost the 200s in this trend line, then the selling should begin to accelerate, just like it started to right here, right? All right, so that again is why I do these long-winded videos. Where to? I'll give you targets from Netflix, sure. Right here, they're going to come in and buy it at 82. There'll be some, you can use a daily chart to see where they buy along the way. Let's see, why aren't my levels populating? I know I had this marked up. Of course. My go-to, I use a lot of charting platforms, but the bane of me on this one is every time these stocks split, they don't adjust the levels. So you can see I had it all marked up. I even gave this one to you on the daily chart. We put in divergent high. I had targets and everything. And they're all gone. I have to replicate it. So anyways, that's it, because the 10-to-1 split right there. All right, so that's that. And next up, Palantir, PLTR, I threw that one out to you recently as a short. Broke the primary uptrend line. Nice, clean, bearish rising wedge. Where's it going? Well, you can see all my targets. So you have another from the highs. If it hits this target, it's going to be about 37. And this is a great target. You have intersecting uptrend line and price support there around 80. Now we'll call it 90, give or take. Costco. Okay, you want to kind of get an idea, you know, tech's its own thing. It's going to always do its own thing. But there's your primary secular bull market uptrend line off the '09 lows in Costco. But Costco peaked here, put in a divergent high, took out this trend line, back tested it for a while, put in an equal and still divergent high. Then went on to take out my secondary trend line right here. Breakdown back test, and more recently has lost the 200-day moving averages. Now below there, dancing on really good support. I had this 872 target. If and when that goes, trend line 789, 704. And if Costco does hit those targets, it's going to be down from the highs about 35%. And will most likely, and then ultimately you can see right here, this uptrend line in 810, or 610, I'm sorry, which would be a total drop of about 43%. More than likely, the only way Costco, one of the prized retailers out there due to their business model, the membership fees, keep the earnings nice and level, just world class for warehouse clubs. If that happens, that's a recession, guys. That's a bear market, and it's I have a high degree of confidence it will happen. And you have the levels it'll take. Look, maybe it happens next year, right? Maybe we hold this. Like I like to say, support is support until unless broken. We do that. My lines are going to go like this, and it's just going to set the stage for a bigger drop when that happens. But if it happens before then, again, you can replicate these levels. These are the key levels, especially on the weekly charts that matter. This is ASML, another semi. Divergent high, just borrow you, duplicate you. It's not as if these divergences don't mean anything or matter. Sometimes I'll get those comments. Yeah, that one was good for a 60% drop. And you can see I had two targets on that one back then. So I think we shorted it here in the trend line breakdown and back test or somewhere in there, because I would have given you two targets. The second being this purple primary uptrend line, see it right there. And now, as these divergences continue to grow, again, it sets the stage for an even larger drop. So my guess is we'll take out this primary trend line, and that's going to even set the stage for a much larger drop. If we come down to that old T2 level, that's a 64% drop. AMD, big, obviously big semi. It's been getting some traction lately. With the buzz being that their chips are advancing and going to start to give, which I predicted, I've been predicting for a while now, that NVIDIA is not going to continue to reign king superior. If it's not a Western chip company, it's going to be a Chinese. The Chinese are very resourceful, and if anything, they're very good at taking something, breaking it apart, analyzing it, and then fixing it. They'll catch up or probably get ahead of us sooner than later. And so anyways, there's AMD. From a technical perspective, breakdown back test. And again, big divergent high coming down to this primary uptrend line at minimum. And again, that'd just be a bull market correction, guys. But that's a 55% drop or so, depending on where we hit it. Cisco, big divergent high. There's your uptrend line. No sell signals on that one yet, but just has a pattern. It, all these stocks, guys, it looks great. It feels and smells bullish. Nobody wants to short except me when things are up here. And this is where everyone wants to short. And that's what I'm usually covering, because I see things like divergent lows, like this one, positive divergence. My PPO lines keep disappearing on this platform for some reason. Divergent low. Oh, no, that wasn't a divergent low. This one was. And, that's it. So wash, rinse, repeat. This is swing trading, more trend trading. On a weekly chart, this is the realm of the trend trader. I'll try to capture these trends And again, that's why I do these videos. That's why I started the day with a 5-minute chart. You're a quick trader. You took that trade, and you're already up. How much are you up so far? I got alerts going off on another monitor. Well, we shorted there. So 5-minute chart, no, 5-minute. You're good for about a 2% profit so far. And now you're back testing this trend line. So, but like I said, there's a lot of evidence in here that in these charts that say you might want to just ride out the counter trend bounces. If they fade this pop from NVIDIA, it's just, again, like I said, a jagged knife through the heart of the bulls. All right, guys, we're almost done. Where was I? I got off track. I re-enter QQQ so my holdings populate. I covered AMD. I just covered Cisco. All right, now we're getting away. As you can see, everything I just covered, we're through the top. Now we're on AstraZeneca, number 18. So we've covered 17 so far. They've all been tech stocks, right? NVIDIA, Apple, Microsoft, blah, blah, blah. Now we're on AstraZeneca, drug manufacturer. Same story. This is, I don't have DH written here. That's a divergent. That was a divergent high. And again, it's not like it didn't matter count. That was a 30% drop. What did it end with? A divergent low. What did we do on April 6th? Covered all shorts, went full long. And that was a divergent low there. That was a divergent high. This is swing trading. This is my style of swing trading. And so this is a big divergent high. And this is an important stock. Again, and the, it's the largest healthcare stock in the NASDAQ. Micron. Good night, Micron. Done. See that uptrend line? Steep uptrend lines. They never end well. It's like, when stocks start going parabolic, this would, add an uptrend here. And the slope started to accelerate. Anyways, there's your breakdown. And that's what happens in a hot market when you get, bubble-like conditions. The rush for the exits can be very swift. And that's, again, what I keep doing in these videos. We're just have a trading plan. I know some of you disagree with me on where the market's going, and that's fine. And all day long, I point out support levels to buy, including, yesterday. And but that's a powerful candle right there. And you can see, again, when these, stocks break, the semis, the down is pretty hard. And that's why I wanted to do these videos, because before I'm going to get back to these real quick. The semis, I meant to cover this with you in the recent one. So remember, we're short the semis too. We put in a bearish engulfing on the weekly. We took out the trend line. And so this is one reason that I'm not trusting the rally that we're having post NVIDIA. And I even said if they pop after, it'd probably be a couple days to weeks, maybe at most. But we already had a powerful, clean sell signals on the semis. Again, I showed it to you on the daily, and we're on the weekly now. But what happens, again, this is from my experience, when the semis break, when they break these trend lines, you don't want to get cute. I was getting cute lately. I got cute up to yesterday trying to game the counter trend bounces and got them on the hit the minimum target on the last one, and we gamed a couple on the way down, or I pointed out to you if you were following the short-term charts on the NASDAQ 100 futures or QQQ. But as I told you in recent videos, I get less and less apt to continue to do that. And I told you I'd turn my focus to the daily charts, because once you break down, you'll get those divergent lows, and they're going to work for a bit, but then they get sold into just as they start to look good. And there's usually, again, it's the nature of this sector, the semis, when they break down. In this case here, I guess you had horizontal support. I didn't have it marked, and it broke. And then it's nothing but red sticks. Look, from here, from the breakdown, we dropped for 3 straight weeks right there. Actually, that we would have dropped into there and then reversed that week. That was a 25% drop before we even got a counter trend rally that time. So just want to point that out. Here it was a little bit more orderly, broke down, back tested, flirted with the 200s for a few weeks, and it was clear that they couldn't take them back. Then you had a bear market. And then every rally back, it kept getting rejected until it finally took back the 200s. There's an example of hammer down when the semis broke right there. So, Anywho, we're on a sell signal in the semis. Define your your trading style and your time frame. If you're a swing or trend trader, like I said, there's nothing, no, there hasn't been any reason to cover your shorts or to second guess it based on these charts and even the daily chart. All right, back to QQQ. I told you I'd cover the top. Oops, didn't do that on purpose. Trying to click in and queue up the QQQ chart so my components load again. All right, AstraZeneca was the last one I covered. Micron was, and that just prompted me to show you what's going on in Semiville and kind of reiterate that if the semis buckle, the market's going down. All right, T-Mobile, TMUS. As you can see here, I've got two trend lines, or have two trend lines. One, beautiful bull market uptrend line, breakdown, back test, rejection, and this BOD, or benefit of the doubt, line we're on right now. So when that breaks, T-Mobile is going to drop down to about 152. It's going to be another 26% drop. And then before all said and done, probably all these levels here. Pepsi, this was one of our longs recently. We bought it here on this long-term support. We gamed it up to my third price target on the daily. And that's it. I milked the meat, sheared most of the meat off the bone. As a bear market rally, that's all I wanted. That was a divergent high. We broke the uptrend line there. Then we had a secondary trend line that came in. We bounced on it, lost that there. Lost a lot of stuff here. Anyways, that's it. So just showing you where it's at. And, this is typical of like I told you, the majority of stocks, and I checked it today, by the way, guys, we still have in the NASDAQ 100 and S&P 500 about half the stocks, right at about 50%, are still and have been for a long time below their 200-day moving averages. It's crazy. It's a different story for anything tech or tech related, or in that circle jerk club of AI. Everything else, a lot of these, old world blue chip stocks are in bear markets, and we've been gaming them. Like I told you, this is where we bought it for that reason and long term support. But I don't have an opinion on it now. I'm just moving on, just showing you the bigger picture. That's what the weekly charts show you, the bigger picture. Primary uptrend lines, divergent highs. This is ISRG, medical instruments, intuitive surgical. Breakdown, been dancing on 429.33, which is my first target. This is my second target. Once that level goes, we go there, and it'll come in with the trend line. So if you're looking to buy this stock, this would be a great level to buy it. If it takes out the 429, drops down here, and then you have a primary bull market uptrend line that comes into play. Lindy. All I have on this one is a nice, put in a divergent high here, corrected. It's been dancing on this level. Put in a second, another divergent high, pretty much double top like a lot of things lately. Took out this uptrend line right there, very well defined, little wedge pattern. Went straight down to my 413 target, and it's on it right now. If and when that goes, next stop's 350. That's going to give you a drop of about 15%. And then if it's a bear market that I think it's going to be, next stop's going to be down here, which would be from where we're at today. If that level goes, that's about 267. That'll be a 35% drop. But as I like to say, support is support until less broken. So these are levels. You can replicate these on your own charts, set price alerts, and check back on it and see. So for those of you that are bullish on either the market or this stock, well, I can tell you right now, I wouldn't, there's only one move to be made on this stock right now, and that's to buy it. A stock, when it falls to support, you either buy it if you're bullish and you think that support's going to hold and the stock's going to bounce, or if you're bear, you just wait till it breaks. And this is a weekly chart, so you want to see. You could also get to the daily and hone down on the, you can see my level here, 410.54. So that goes, you could jump, get up. That's where you'd probably want to enter, use the daily chart. And the weekly will just reaffirm it. If you get a solid weekly close below there, then that's helping to reaffirm the sell signal. Lam Research, split and did all that, but I replicated. This is the primary uptrend line on LRCX. There's your sell signal. Remember, the semis are broken down, so this one's going to drop, in my opinion. Before all said and done, it's going to come to that trend line, probably end here, somewhere in here. So I'm looking at about a 50 to 60% drop in Lam Research. Again, it just depends how swift and how the move down is. Amgen, divergent high. Again, I know I sound like a broken record, but again, these aren't, this is a drug manufacturer, Amgen. Divergent high, no sell signal at this time, but if I wanted one, I'd go look at the daily chart and try to see. There's better fish to fry, in my opinion. AMAT, breakdown, back test, pretty much an equal and still divergent high. Just take these divergence lines. And again, to repeat, it's not as if this one didn't play out. That was good for a drop of about 51%. And you can bet your bottom dollar that if I was short AMAT individually, that's where I wouldn't have just covered. I would have turned around and gone long. That's the primary bull market uptrend line. And I'll bet you we even had probably a divergent low at that low. Yep, there's my daily chart. And as you know, everything is one of many reasons I was covering all shorts and going long on the early April lows. All right. App loving, night, just broke down. It's got a lot of downside, a lot of thin air on that one. SHOP, Shopify, big tech stock, software application. They do websites and stuff for, if you set up a retail site. And it's just the nature of this beast. You put in a divergent high, you get divergent high 1, nice correction, divergent high 2, another correction. It's usually the third time, not always, but I've noticed it's usually the third time's a charm with divergent highs. And then, but most importantly, you need a sell signal. Right there, it took out my uptrend line and the 200-day moving averages. Here, it took out the uptrend line. You got the 200s here, and there's a long-term uptrend line. And anyways, it's Shopify. But guys, I can't find a bullish chart in here. I mean, there's support levels. And again, we keep bouncing off these on the corrections, but sooner or later, these primary uptrend lines, this is Intuit, and we go all the way back to the '09 lows. This is the primary bull market uptrend line in Intuit. And when these lines go, please understand that all along we've been in a bull market and they've been buying pullbacks to these primary. When these primary multi-year, multi-decade trend lines go, it sets the stage for a much bigger drop, something that we haven't seen in really since 2008. Qualcomm, there's your next trend line to break. And I'm probably going to go to this uptrend line there. And before all said and done, there's a purple long-term uptrend line. I could probably put another one in here, I'm sure, if I wanted to. Come in something like that. PDD, I don't have much an opinion on that one other than, broke down. In fact, it broke down there, back tested, and then rejected on this weekly uptrend line. Intel, I'm almost done, guys. Where am I on? Yeah, I wanted to go all the way to get to Intel. Intel. If you followed me for a while, this was my favorite semi in multiple instances. We went long on this pullback to this long-term support. I love the stock here. We had multiple long entries. I wish I could tell you I tucked it away on the last time and milked this whole thing up. That's where the government came in and backstopped it. But it's done. We've come full circle. There's the primary downtrend line. This stock peaked here, a series of divergent highs, fell down. That was a big, powerful divergent low. Again, this is one, in hindsight's 2020. I don't care. Move on to the next one. But I should have just tucked some away long-term there, and that would have been a great target. Look at that. That was that support shelf when the stock was peaking. It was support. It was taken out there. We briefly tried to take it back and then failed. And so either way, you can see Intel was rejected there. All right, that was my plan. I covered the top 30. I kind of went off on a little tangent here and there just to show you what's going on in the markets and to share my thoughts again. Yeah, so far they're they're selling this little post NVIDIA pop, and the media will go right back. These clowns that came out today, because I read the headlines, I get them, I see them on my phone, that all of a sudden all the fears about the AI bubble are over now because of NVIDIA, and well, I guess they're back. So, all right, let me wrap the video up and get it out to you guys. If you have any questions or want a chart opinion, whatever, on anything I covered in this video or anything else, just drop me a line in the comments section. This has been Randy Finney with Right Side of the Chart. Have a great day.